Welcome back. The markets, as we told you, are showing a bit of a recovery after the early dip, but let's see if this holds. At the moment, it's about a 2% gain on the Nifty, and therefore, a decent amount of green. Advanced declines as well. 3 in the green, in fact, 3.5 in the green for 1 in the red. So, at long last, it looks like there are some more pleasant times for the bulls. But it's not pleasant times for the infrastructure sector. It's facing a severe impact because of the COVID-19 lockdown in the form of a complete halt in construction, revocation of toll collection, severe working capital pressure, all of which for some companies might become an existential problem. To understand whether this impact is short-term, whether it will have an extended bearing on order inflows, we have Vinayak Chatterjee, Chairman Feedback Infrastructure, and Vaidi Murthy of NCC. Good morning, gentlemen. Thank you very much for taking our call. Well, Mr. Murthy, how do you see this playing out? Immediate lockdown, yes, for this month, but will labour come back after they have been so badly scarred?
Yeah, this is a big problem for all of us, and particularly for projects in cities where we are doing, for example, metro projects in Pune, Nagpur, Mumbai, etc., where work has come to a complete standstill. Whereas in projects where we are in far-flung areas, like we are doing the Nagpur-Mumbai Expressway, is a 75-kilometer stretch, where in some pockets work is still going on, provided raw material is available. So workers are there. We are taking care of them, providing them accommodation, food, shelter, and all that. So work has not stopped. But because the movement on the highways is curtailed, the raw material availability at site is also a question mark, like cement, steel, and aggregates, etc. So the construction work has definitely come down very substantially. And the problem is likely to continue for some more time. Even the first quarter of FY21 could be a big problem. And after that, in the second quarter, we have the rains. So FY21 construction activity picking up may be very difficult. Maybe it will take at least 6 months from now to see any improvement.
Okay, it will take 6 months from now to see an improvement, and a lot of metro projects in Mumbai, Pune, etc. have come to a standstill. I guess this was expected. Mr. Murthy, just stay on. We have Vinayak Chatterjee as well, who joins in to give us his view. Vinayak, hi, good morning. You know, the big problem that a lot of companies are facing now is immediate fixed costs that they have to, fixed costs that they have to pay, whether it's employee salaries, rent, electricity. Those simple costs are now, become a big challenge. What do you see as the way forward, and how much do you think the sector could get hit in the very near term?
Look, this is beyond the definition of the word problem or crisis. I think infrastructure companies are facing an existential dilemma. How many of them will be able to come through with this in terms of speedily resuming operations is a big question. The only issue right now is liquidity. We have to conserve cash to take care of the lakhs of workers and employees and staff, not only in headquarters, regional offices and project offices, but scattered across construction sites and project sites across the length and breadth of the country, and may I add, in many cases, overseas also. So in the case of liquidity, there are really two issues. There is a liquidity tank, there is an inflow of liquidity and outflow of liquidity. So both sides have to be taken care of. So far as outflow pipe is concerned, I think the postponement of installments and interest is indeed a big help to conserve liquidity. Most companies are going to be very, very cautious on releasing supplier payments. Certainly impact the outflow pipes. The big question is the inflow pipe. And therefore, since inflows from account of toll collections, from operating revenues, even the discoms have been allowed not to pay for 3 months, etc., and customers and government is not going to be paying so easily in today's times. So the inflow pipe is what is worrying. And let me just conclude by saying that the first immediate step is automatic increase of 10% of the working capital and term loan limits of every bank to every client in the construction industry is very much in order if we are to get the economy back again and the jobs back. So no bureaucracy, immediate increase of 10% of the sanctioned limits on term loans and working capital. I'm even saying term loans and working capital because the distinction between the two has vanished virtually. And finally, government postponing all its, allowing postponement of its collectibles, including paying GST upfront when you raise an invoice and many other statutory payments, is something that I would argue as an immediate first step. Rest of the steps we can think of in due course. But let me stop here.
Okay. Well, you know, Vinayak, I was going to make a much more radical suggestion, but I will do that in just a minute. First, let me ask Mr. Murthy his experience and how he foresees the financial problem. Mr. Murthy, you have a 3-month moratorium. That's all we have from the Reserve Bank. How do you see liquidity issues that Vinayak has briefly described? And even after 3 months, how will finances move?
Yeah, liquidity is a major constraint, and I fully agree with Mr. Vinayak. And also, the problem will not disappear in 3 months' time. We need a much bigger window. And also, primarily, the government agencies who are our clients, their focus has shifted towards containing the virus, and they are not giving, and also welfare of the people, their accommodation, shelter, food, etc. So nobody is thinking of payment to the construction companies,
Absolutely.
even for bills that are submitted and certified and approved, but payment is not coming. That is the biggest problem we are facing. This 3 months is simply a eyewash. At the end of 3 months, again I have to pay for all the 3 months, is it not? So that it may give some temporary relief. But one thing is, I fully agree with Vinayak, some 10% working capital limits should be given. And I'm glad to share with you that some banks like SBI, they already started the process, and they are giving about 10% of the fund-based limits of construction companies as a demand loan for a period of 1 year at a rate better than the applicable cash credit rate. That is a good step, and other banks are also likely to follow suit.
Yeah.
That will give us some relief in terms of taking care of all these payments.
Yes, actually, Bank of India and Bank of Baroda, Union Bank, Indian Bank, all of them have announced a similar product. And if I read right, some of them are offering it as a 2-year loan as well. To cross over this 10% extra, and I think somebody was offering even 20% extra. But Vinayak, I was making a much more radical suggestion. There are a lot of dues that the government has to pay. Governments have to pay, center and states have to pay companies, not just construction companies, across the board. Would it be radical? I mean, is the time crucial enough for government to just pay all its bills? And of course they are short of cash. Direct tax collections are less than they were last year, but RBI can remove its entire overdraft limit on all governments. If all payments are made immediately just by drawing overdrafts from RBI, do you think that is the need of the hour?
Certainly is. I mean, look, there is no question. I think I would say not only bills payable, but including all arbitration awards where the government has lost to the private sector, instead of appealing further to the courts, all of them should be honored 100%. After all, an arbitration is an arbitration. An award has been given. So in the past, we asked for 75%, but today I'd certainly like to say 100%. But Lata, let me just say that, look, one has to understand the socio-political reality of the day. Right now, I understand government is trying, with diminishing tax collections, the government is trying to hoard every last penny for the vulnerable sections of society, because we do not know what the months and years or the months ahead foretell. So that is certainly step 2. Let the government get a hang of its finances and its liquidity situation and enter into discussions with RBI. But what stops all the banks from giving banks are flush with liquidity. If the State Bank of India and other public sector banks can, with minimum fuss and bureaucracy, put their best foot forward and do what Mr. Murthy has said, immediately sanction 10% ad hoc limits. God knows we may require another 10% later, but to start with, right now, why can't a 10% be given by the private banks and other banks instead of acting bureaucratic and waiting for a nod and a wink from RBI to do so? Surely nobody's going to stop them. So may I also appeal to RBI to please enjoin on all the banks who have still not done it.
Sure, that point is taken. Yeah.
Yep.
Okay, no, I want to just end with one last question because there is paucity of time. Mr. Murthy, you know, we were speaking to a couple of auto companies yesterday and they indicated to us that forget about fresh orders coming in, even the orders that were confirmed before the lockdown are now starting to get cancelled because of, the challenges that lie ahead. What is the situation as far as order wins are concerned for NCC? What are the challenges that you see? And will you look to scale down your guidance? I mean, your Q4 guidance was about 3,000 crore revenue. I don't know if that's on track now, but you tell us.
Yeah, the problem is there. Actually, the real problem we face is because of the stoppage of work in the state of Andhra Pradesh, because of shifting of the capital city from Amaravati to Visakhapatnam, the Secretariat building, etc. So some orders are likely to be cancelled, but we have proactively taken them out of our order book. And we are also carefully examining the situation there. Other than that, in any of the states or in central government agencies, we do not have any problems of cancellation or the stoppage of work because of government agencies. Stoppage of work because of the pandemic is understood. But because of the government agencies or because of the client requirements, there is no stoppage of work anywhere. I am confident to say this. And also, as far as the current quarter is concerned, the numbers are yet to come in. It looks like a tall task to have a 3,000 crore turnover in the fourth quarter. You may be aware, in 9 months we have done about 6,200. So for the year as a whole, the top line for NCC could be, it is my personal guess, we don't have the numbers as of now, between 8,500 to 9,000 crores.
Okay, all right. Gentlemen, that was a very informative discussion. We hope both of you stay safe, stay healthy, and we hope we overcome all of these